Welcome to Economic News Desk. For July 17, 2026, we are looking at a United Kingdom undergoing a profound structural realignment. From the nationalisation of its last primary steelworks to the frantic scramble for a new Chancellor and the looming financial instability at Thames Water, we are seeing three massive shifts that are testing the stability of the British economy. We begin with a major move in heavy industry. The UK government has moved to take British Steel into public ownership, a strategic intervention aimed at protecting the Scunthorpe steelworks. This isn't just about preserving jobs for the roughly 2,007 people employed there, it is about safeguarding a vital national capability. Scunthorpe is the nation's last source of virgin steel produced directly from iron ore. Without this specific production, the United Kingdom would become the only G7 nation without its own domestic capability for making primary steel. There is a practical, industrial necessity to this decision as well. The plant produces specific types of steel required by the construction industry and network rail materials that aren't currently manufactured anywhere else in the country. Furthermore, the cost of letting these furnaces cool is immense. Once the equipment has cooled, restarting it is financially prohibitive. While the government has committed to covering running costs for the immediate future, it is unlikely to remain in charge of the business long term. However, the move comes with an immediate price tag and legal complexity. The National Audit Office previously noted that the Scunthorpe Steelworks was costing the government approximately £1.3 million a day, and the current owner, the Jinyi Group, is already seeking compensation for the nationalisation. As the government manages these industrial shifts, it is also navigating a massive leadership transition. Following the resignation of Sir Keir Starmer, Andy Burnham is set to become Prime Minister this coming Monday. While no official decisions have been made regarding the Treasury, the race to name a new Chancellor has become a high-stakes contest between candidates who represent very different economic philosophies. The choice of Chancellor will be a primary signal to global markets regarding the new administration's fiscal direction. Currently, several names are being discussed. Shabana Mahmood, the current Home Secretary, is a leading candidate. Her appointment could be seen as a move to reassure financial markets, though there are reports she may prefer to stay in her current role. Yvette Cooper is also under consideration as a potential compromise pick, given her previous experience within the Treasury. Other candidates carry different implications for the national balance sheet. Wes Streeting is viewed by some as a market-friendly option, though his views on public spending may differ from the Prime Minister's. Ed Miliband is also a name in the conversation, though analysts are watching to see how his net-zero policies might impact bond markets. Other potential appointments include Pat McFadden, seen as a safe, experienced choice, or John Healey, whose appointment could signal a significant commitment to increased defence spending. As for the outgoing Chancellor, Rachel Reeves, speculation suggests she may be moved to a junior or mid-level cabinet position despite her recent defences of her fiscal record. How the political leadership race plays out in Westminster. A massive financial crisis is mounting in the utility sector, presenting a significant test for the incoming administration. Thames Water has reported a post-tax profit of £113 million for the year ending in March, a significant turnaround from the £501 billion loss it saw the previous year. But that profit masks a much more precarious reality. The company's net debt has climbed to £18.5 billion, and its cash reserves are dwindling. Thames Water has warned that it may only have enough liquidity to continue operating until the end of this year. While customer bills have risen by 40%, the company is struggling with operational fallout, including a 77% increase in customer complaints and a doubling of billing disputes. And while pollution incidents have fallen by 18%, the company has still failed to meet more than half of its performance targets. There is currently a standoff between the company's lenders and environmental regulators. Lenders have proposed a rescue deal that would involve significant debt write-offs in exchange for more leniency on environmental targets. But the Environment Secretary has already rejected that plan. If a deal cannot be reached, the company faces the prospect of special administration. This would involve temporary public control to find a new buyer, but it would likely leave the taxpayer responsible for existing debts and the massive public investment required for essential infrastructure upgrades. For now, lenders are waiting to see how the incoming Burnham government intends to handle this looming funding gap.